Individuals around the world who are looking to invest their hard-earned money often turn to the stock market. However, if you've never used the stock market before, it can be almost as bad as gambling in a casino. Today we're going to discover why the stock market is like gambling if you don't know what you are doing, helping you decide if this is a risk you are willing to take with your money. Understanding stock market strategies. One of the critical areas to understand when entering the stock market is your strategies when buying stocks. Buying a stock just because its market price drops suddenly is not a good idea. This is where many first-time investors trip up, and it's one of the worst mistakes you can make. Instead, it would be best to focus on buying stocks at a reasonable price for companies that are growing. You'll want to start slowly and take time to understand the ins and outs of the stock market, which won't happen overnight. We always recommend that you avoid rushing to decide when investing your money, as this is often when the most considerable losses occur. No guarantee profit. Just like gambling, buying stocks has no guarantee of growing wealth. You aren't guaranteed to increase your finances in the slightest, and just like spending a night at the casino, many people find that they end up losing a fortune on the stock market. Before deciding on this type of investment, keep this in mind, as you may find that you are safer putting your money away in a savings account with good interest. If you are investing a high percentage of your savings into the stock market, think about whether you are willing to lose it all. What would happen if you lost everything overnight if the market crashed? While this might not happen, it's a risk you need to be willing to take if you are entering the stock market. Don't trust everything you hear online. If you've been following the stock market online over the past few years, you might have heard about the GameStop incident. This is an excellent example of stock speculation gone very wrong, and it's one of the best examples of how you could lose money very quickly when investing this way. There are so many online tools readily available to first-time investors, but they can make it that much easier to lose your money. As with practically anything online, you can quickly make a decision that you can't turn back from, especially if you are just bored at home and looking for something to do. Don't trust the advice you read online, and think very carefully about the companies you make your investments with. Not everyone has your best interests at heart. While you might think that everyone working in the stock market has your best interests at heart, sadly, it's just not the truth. Everyone working at a company that you might invest your savings in is looking to make money as well, so keep this in mind when choosing how to invest your savings. Many companies try to entice new investors by offering great deals and free stocks, but ultimately they are just looking for a way to get your hard-earned cash from you. So be careful who you trust and shop around before making any final decisions. Results don't come overnight. For anyone who needs to make a quick buck, the stock market isn't going to be the place for that. While there are a few exceptions, most people look at the stock market as a long-term investment. You might leave your money in for decades at a time to get the best returns. This is where the stock market is just like gambling, as you can never know what will happen with your money during this time. While we'd like to hope that the stocks are up in value, you'll need to be very careful with your plans if you are banking on using these funds for retirement. Make sure you also keep extra money in a traditional savings account, so that if something goes wrong, you are left with nothing for your future. Work to build a solid portfolio. When you decide to take the risk and enter the stock market, take your time to build up a solid portfolio. Investing isn't just about making quick trades. Instead, it would be best if you focused on staying invested and your long-term plans. Work on building a solid portfolio that's right for your goals and needs. There will always be some risk involved in investing, but working with the right company can help minimize this risk. Make sure you diversify your portfolio and act with patience for the best results. Allocating your assets properly is also essential, and a financial advisor can work with you to mitigate potential issues in the future. As you can see, the stock market is similar to gambling in many ways. While there are some differences between these two activities, you need to remember that the stock market isn't a get-rich-quick scheme. The best investors know that patience and time are necessary for good results, and you'll want to keep this in mind when investing. We recommend constantly researching the stocks you are buying beforehand and learning about the companies to avoid losing your money as quickly as you would at the casino. The stock market is a great way to build long-term wealth when appropriately used, but it can just as quickly be fatal for your bank balance. Keep the tips we've shared in mind when researching your options to create a portfolio that will serve you well for many years to come.